Roku is up nearly 8% today. Now, why are we up so much today? This is off the fundamental news release that Roku are looking to cut their costs even further. So again, if you're able to cut costs while keeping that revenue in line, obviously you're going to increase those profit margins and in hand increase the net profits. So we're gapping off this news. Again, sometimes this can be an overreaction, which could be potentially what we're seeing now. And that's why we're starting to pull back. But what are key levels that we want to be paying attention to? So on the support side, we have an 84.25. This is our first deviation on the 1 year. But I really like this level because you'll see this is most likely why we had a big move off this release. And that's just because we were coming into a kind of a heavy area where a lot of orders are sitting. So this 84.25, not only is that where large orders are sitting, but it's now also going to be a gap fill location. So that should be quite a nice support on that pullback if we do continue all the way back down to 84.25. And just to note, we did have one other support at $68, just in case you're waiting for kind of that longer move, or if you're watching this video maybe a few weeks down the line. But for the short term, 84.25 is going to be that key support. Now to cover the resistances, you can see on the open we hit this 95.20. We hit that straight into the open. A lot of sellers are going to be sitting there. That's why we start to sell off, and we did continue through and we broke straight through that 91.75. Again, whenever you're moving off a fundamental release, we tend to be a bit more calm on taking these levels, unless we're looking for more of a scalp trade. And the reason for that is, again, we can break through these levels very quick when there's some sort of a fundamental news kind of attached to breaking these levels. But if we do continue to push back up, again, I would kind of ignore this 91.75 just because we haven't really respected it today. And instead focus on the 95.20 if we come in to test that again. And if we break through there, we can break through that $100 psychological level. Then we have kind of two more key levels around that 103.60 and 106. And if we were able to break that, we do have a final level at $115.50. And again, considering how Roku's been moving, even just kind of looking at the last 3 months, considering we went from around $50 to $90, or even at that case, actually $100, you know, if it's doing a 100% move in about 2 months, it can definitely, you know, have that reaction to either the up or downside. So we could easily come down, test the 84.25 or the $68, and that's why we noted those two key supports. But it can also have that reaction back to the, continuing to the upside. We could definitely come and retest this 95.20. If so, you'll probably see a lot of shorts sitting there. So if we break out, it will most likely be quite a strong breakout to then test that $100 resistance. And then again, we've got the two next deviations at 103.60, 106. So it's going to be a very strong level. This is where I'm probably going to start shorting. And again, we'll probably short the shares, but we buy the calls to define the risk. And why do we buy the calls? Because we never want to be shorting a stock nakedly. So if we're shorting shares, we're always buying protection. So if for any reason this stock did squeeze, again, probably not as likely on a stock like Roku because there's just so many shares outstanding. But if you did ever get caught in the squeeze, buying that call will just define you that risk. And so you never kind of get trapped in any sort of short squeeze. And again, that final resistance at 115.50, which is kind of my favorite key level to short whenever we can get to that final third deviation, whether that's a 6 month or 1 year level, it doesn't matter. In this case, it's a 6 month level. Always going to be a really strong resistance to look to short. And again, that's when I'll probably short the shares, buy calls, obviously define the risk like we talked about before. And a lot of times I'll just do kind of vertical spreads at these levels because the probability that we start to trade below there is going to be quite high. Because again, if you understand standard deviation, you know at third standard deviations, that means that 99.7% of data should trade below that level. So again, in the stock market, nothing's going to be that accurate, but it does give us a good signal that if we trade at these kind of highs and even that 106, we're going to most likely quite quickly try and pull back and start trading below that level.